Now, global growth is starting to pick up, according to the projections by the International Monetary Fund. But the heads of both the IMF and the World Bank, hosting their annual spring meetings in Washington, are appealing for greater global cooperation on a range of challenges and obstacles. From those meetings, our correspondent Daniel Ryntjes reports.
Global growth may have picked up in 2017, but as the world's top financial leaders gather here, there's a concern about a populist shift towards trade protectionism. International Monetary Fund Managing Director Christine Lagarde says she can work with the US administration, hoping to encourage an agenda that excludes both distortive and protectionist measures.
From the various contacts that I've had with the administration so far, I have every reason to believe that we will make progress, that we will cooperate all together in order to support and indeed improve the system as we have it.
As famine threatens 20 million people in East Africa and Yemen, World Bank President Jim Yong Kim is appealing to donor nations not to reduce their foreign aid budgets. He's also attempting to catalyse private sector financing alternatives to the internationally agreed Green Climate Fund. It's only received a small fraction of the pledges necessary to reach its $100 billion target.
So, for example, if you could have pension funds, large holders of capital invested very conservatively, who may be interested in climate, but they would need help with guarantees, risk mitigation, et cetera, in investing in climate change activities in poor countries.
The World Bank also predicts that 2/3 of all current employment tasks will be made obsolete by automation, the use of ever more sophisticated robots and artificial intelligence. And so the IMF and World Bank are recommending to world leaders that they invest in productivity, using an appropriate mix of research and development, education, reskilling of workers, and infrastructure spending to create a more sustainable and inclusive economic growth for the future. Daniel Ryntjes, CGTN, Washington.
Well, let's check in on the discussions at today's meetings. Daniel Ryntjes now joins us in Washington. Daniel, welcome to the show. Now, we know the issue of Trump's protectionist policies and certainly global trade, they're hovering over talks there. We saw White House National Economic Council Director Gary Cohn saying yesterday that Washington is prepared to get tougher in the trade arena. Now, any update on this issue that's causing a lot of buzz over there?
Yes, the message from Gary Cohn, who's now believed to be extremely close to Donald Trump in the White House, is this, that if the Trump administration feels that there are unfair tariffs which don't benefit the United States from some of its products, it will simply reciprocate those tariffs. And so it's sending a message of being tough, but in the views of the Trump administration, fair on trade. So this is in alignment with what we've been seeing, which is not so much a wholesale rejection of current trade, but certainly a much tougher stance on enforcing it.
Well, Daniel, we know aside from this issue, a number of African ministers of finance are there to discuss, of course, the economy. We know there were some discussions around sub-Saharan Africa and, of course, its return to growth. What were the highlights of these discussions?
Well, this is all about African ministers and advisors getting to grips with how to live with economic growth and take advantage of the current cycle of recovery in the global economy fully at a time when many of them are still struggling because of the commodity downturn and other issues. So here's a list of some of the things that came up in discussions. Diversification, obviously, from commodities where possible. Better tax mobilization, so the collection of taxes and the institutions involved. Less emphasis on government-led development and more emphasis on private sector development, and with that in mind, stable government policies, a better business environment, better legal framework, and one of the big issues here, end to political interference in central banks. And the last appeal that was made here was not to stop spending on infrastructure that is necessary to provide the structures that will bring about the economic growth that Africa definitely wants to encourage in the years ahead.
Now, Daniel, certainly the IMF is quite positive on the outlook of the global economy. However, other issues have come to the fore: immigration, migration. Give me some insight into what else besides protectionism and trade is coming out of those meetings, of course, as we come to the end of day 2.
Well, we have some breaking news, some market-moving news to you. We caught up with the new South African finance minister just outside the IMF World Bank meetings after he had discussions, private discussions, with the Moody's ratings agency. Now, as you know, 2 of the major rating agencies, S&P and Fitch, have downgraded South Africa to below investment grade. Moody's is still considering. And he told us that Moody's gave no reassurance that they would not downgrade. Essentially, what the new finance minister, Malusi Gigaba, is saying is he's preparing the South African markets, the bond markets, for the very strong possibility that Moody's will follow suit. And the background to this, of course, is with a new finance minister, there has been uncertainty in South Africa. And in the Sunday Times of South Africa, the economic advisor to the minister, Christopher Malekane, talked about the expropriation of white assets. That has caused a lot of concern in the global investment community. Certainly the minister is trying to put on a brave face. He's trying to say that South Africa will pursue very strong and prudent economic policies going forward, but he's unable to give exact advice, exact policy on the direction of these issues that are so important to the investment community, and therefore it's more likely that Moody's will now downgrade.
Wow, well, that's quite interesting. Many thanks, Daniel, of course, for that update. Daniel Ryntjes joining us there in Washington.